Blackrock is back in the spotlight, and this time, their behind-the-scenes actions have surfaced. The discoveries from the last 24 hours are nothing short of mind-blowing, especially for Shiba Inu community. But what's the big reveal? Well, let's find out. Disclaimer. Yesterday, the crypto market was shaken once again by a major crash, but this time it wasn't the usual culprit of a Bitcoin ETF outflow causing the turmoil. Instead, the reason behind this plunge caught many off guard. It's become somewhat commonplace for investors to brace themselves for market crashes, especially with the frequent occurrences linked to Bitcoin ETF outflows from entities like Grayscale. So, when the cause deviates from this pattern, it certainly grabs attention. But what happened this time? Well, according to this tweet, Bitcoin took a sudden $6,000 nosedive in just minutes following reports of recent geopolitical tension. And here's something you should understand. Geopolitical tensions have a profound impact on investor sentiment. Any escalation in conflicts, even when not directly related to financial markets, can lead to uncertainty and fear among investors. Such uncertainty often prompts investors to sell off risky assets like cryptocurrencies in favor of safer havens, causing a sudden drop in prices. Secondly, the crypto market is highly sensitive to news and events, given its relatively young and volatile nature. Any news, especially those concerning geopolitical tensions or regulatory crackdowns, can spark panic selling as investors rush to mitigate potential losses or uncertainties. And lastly, the interconnectedness of global markets means that events happening in one region can have far-reaching consequences across various asset classes, including cryptocurrencies. In this case, reports of escalating tensions in this particular area can have ripple effects on global financial markets, leading to a broader sell-off. So yesterday, the crypto market experienced a frenzy, undergoing a severe stress test with nearly $1 billion in liquidations across the board. Among the major assets affected by this downward trend is Shiba Inu, which witnessed a total of $3.63 million in liquidations within the last 24 hours, according to CoinGlass data. This liquidation figure translates to a staggering 14.8 trillion worth of Shiba Inu liquidated during this period. For those unfamiliar with the term, liquidations occur when traders' positions are forcibly closed by exchanges to prevent further losses. Essentially, it means selling off assets to cover losses, often exacerbating market volatility during times of turmoil. The magnitude of these numbers, with 14.8 trillion worth of Shiba Inu liquidated within just 24 hours, is staggering. For many, it's more than just figures on a screen. It's a tangible representation of significant losses and uncertainty. Such large-scale liquidations undoubtedly fuel fear and panic among investors. This discovery undoubtedly added fuel to the fire, prompting a wave of new and existing investors to offload their crypto assets out of fear of further losses. The term paper hands comes to mind, referring to those who fold quickly under pressure and sell off their investments at the first sign of trouble. However, it's essential to understand that this knee-jerk reaction is a common occurrence, especially among newcomers to the crypto space. The volatile nature of cryptocurrency markets, coupled with the fear of missing out or fear of losing everything, often leads to impulsive decision-making. So while it's tempting to assign blame or judgment, it's crucial to recognize that such reactions are natural, given the circumstances and the emotional roller coaster that comes with investing in cryptocurrencies. And here's where things get interesting. Something fascinating emerges amidst the chaos. One Twitter user points out that while panic selling dominated the market, BlackRock swooped in and purchased $110 million worth of Bitcoin. Now, they hold a staggering $19 billion worth of Bitcoin for their ETF. Essentially, BlackRock's move signifies buying the dip, a strategy where experienced investors capitalize on market downturns by purchasing assets at lower prices. This approach allows investors to accumulate more assets for their portfolio while taking advantage of temporary market fluctuations. As we all know, buying the dip is popular among experienced investors. It allows them to acquire assets at discounted prices, potentially increasing their returns when the market eventually rebounds. Moreover, it demonstrates confidence in the long-term prospects of the asset, as investors believe that the temporary dip does not reflect its true value. But now you might be wondering, what's on the horizon? Well, as one Twitter user pointed out, Bitcoin experienced a 10% drop immediately at the onset of yesterday's tensions. Referencing a previous event when similar tensions escalated, Bitcoin also saw a similar 10% decline. However, the noteworthy aspect is that in both instances, recovery occurred within days. Essentially, this suggests that while geopolitical tensions may initially trigger market downturns, the resilience of the cryptocurrency market is evident in its ability to bounce back relatively quickly. It highlights the transient nature of market reactions to geopolitical events and emphasizes the importance of maintaining a long-term perspective amid short-term fluctuations. But when it comes to Shiba Inu, there's more happening than meets the eye beyond the price chart. Typically, people tend to solely focus on the price chart, and it's understandable why. However, looking at it from a different perspective, this approach seems somewhat short-sighted. It's akin to only paying attention to someone's outfit without considering their character or accomplishments. Sure, appearances matter, but what's beneath the surface holds equal, if not more, significance. In the case of Shiba Inu, its recent developments, particularly with shibarium, are worth noting. Shibarium Scan reports an unprecedented surge in activity, with daily transactions skyrocketing an impressive 347,000 within the past 24 hours alone. This surge in activity on shibarium underscores the importance of looking beyond just the price chart and paying attention to the underlying developments within a project. After all, it's these advancements and innovations that lay the foundation for sustained growth and value appreciation in the long run. And this surge in shibarium activity, hitting its peak since March 25th, marks an astonishing 6,000% increase compared to just 4 days prior. It's a significant shift in the dynamics of Shiba Inu's network. And let's not forget that recent concerns within the Shiba Inu community arose when shibarium activity plummeted to nearly zero. This sudden drop raised alarms among holders because shibarium, once a widely used platform with hundreds of millions of transactions, suddenly becoming dormant was troubling news indeed. But now, there's a ray of hope as activity on shibarium has started to climb once again. This uptick is excellent news for every Shiba Inu holder, signaling a potential revival of interest and utilization of the platform. And this is where the official Shiba Inu dev team member stepped in. Lucy, the official marketing specialist of the Shiba Inu team, recently made a bullish statement regarding shibarium's future. In a determined tweet, Lucy reassured the Shiba Inu community of the team's commitment to seeing shibarium succeed in the cryptocurrency market. She emphasized that regardless of who joins or leaves the team, their goal remains steadfast: to propel shibarium to the top of the cryptocurrency market. "We won't stop," Lucy tweeted, showcasing their unwavering determination. Lucy also voiced her belief that the cryptocurrency market will continue to experience corrections, even amidst a bull market, particularly as the spot cryptocurrency ETF in Hong Kong, or any other spot ETF, gains approval. Earlier this week, reports surfaced that a spot ETF allowing investors to access Bitcoin and Ethereum is on the brink of approval in Hong Kong. This news is significant because the approval of a spot ETF in Hong Kong or any major financial center opens up avenues for institutional investors to enter the cryptocurrency market, potentially driving up demand and prices for cryptocurrencies. We all remember what happened and what keeps happening in the crypto space after the recently approved Bitcoin ETF in the United States. It signifies a major step towards mainstream adoption and legitimization of cryptocurrencies as investable assets. So, it looks like there might be a bright future for crypto space very soon. But what is your opinion on that? Comment down below. I'd be eager to read your opinion. If you are curious to find more, then make sure to click on one of the videos you see on screen. And with that, we come to the end of this video. If you enjoyed the video, then please like this video and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video to as many people as possible. Let's get this news out there.